Here are the top 10 questions borrowers have about DSCR loans.
My name is Michael Wolff, and I've been a mortgage broker for over 20 years. My goal is to help people become homeowners and be profitable and successful real estate investors. Before I begin, if you wouldn't mind clicking on the like button, clicking the share button, the subscribe, the little bell for alerts for notifications so you can see all my new videos when I put them out. Very helpful, and it helps me to put out more videos because it makes me feel good about myself. Number 1, DSCR loans or conventional loans. Which one's better? Like most finance questions, the answer is it depends. Depends on the property, depends on credit score, income level, and income documentation, as well as the market. Sometimes the difference between conventional and DSCR is very thin. Sometimes it's a wider margin, so it depends. Question 2, why are DSCR interest rates higher? Well, they're not always higher, but generally they are, just by a little bit. And the reason is they are a little bit more risky to the lenders. It's a higher risk because they're qualifying you on the property itself, not your personal income. So they don't know what else you may have going on with the income levels. So it's a little bit more of a risk, and they build that into the pricing for their protection. Number 3, do DSCR loans have an upfront cost? Well, like most loan products, the only upfront cost you may have would be your appraisal, because that's a third-party company who's hired to do an evaluation on the property regardless of the outcome of their evaluation. So that's the only upfront cost you would have for pretty much any mortgage. Number 4, can first-time investors use the DSCR loan? Absolutely. First-time investors can take advantage of this program, and with some lenders, so can first-time home buyers. Number 5, can I use gift funds to buy a home with a DSCR loan? Absolutely. Some lenders will allow you to get up to 90% or so of the down payment as gift. So you do need 5 or 10% perhaps of your own funds for the down payment, but the rest of the down payment and closing costs can be from a gift from an acceptable source. Typically, it's a close relationship like a family or a life partner, business partner, things like that. But some lenders are a little bit more flexible than others and will allow friends and cousins and more distant relationships. Number 6, what is the minimum down payment required for a DSCR loan? In general, the minimum down payment is 20% for one of these programs. Although the more you put down, 25, 30 or more, you will get better terms on the mortgage, meaning a lower rate or lower cost, and perhaps you will be able to have a lower DSCR ratio on the property with the bigger down payment, meaning the home could be bringing in income that is at or even under the monthly expenses. Number 7, is there a minimum loan amount for these programs? Most lenders will have a minimum loan amount of $100,000 for a DSCR loan, although some will go down to around $75,000, but you should expect higher costs for the smaller loan amounts. Number 8, can I do an interest-only loan on these programs? And the answer is absolutely yes. You may have a slightly higher interest rate for an interest-only loan, but your payment will be lower than a amortized payment, meaning one that's paying principal and interest. So your cash flow for the property will be greater with an interest-only loan. The higher the loan amount, the greater the difference between the principal and interest payment and the interest-only payment. Number 9, do I need reserve funds for these programs? The answer is absolutely yes. On top of your down payment and your closing costs, you will need to have additional funds in one of your accounts after closing as padding, as reserves. Typically it's 3 to 6 months, but it could be more depending on the program, credit score, property, things like that. Reserve funds can be anything liquid or semi-liquid, such as retirement accounts, 401ks, stocks, or checking savings. Anything that you can access can be used as reserve funds. Lastly, number 10. Do DSCR loans have prepayment penalties? The answer is maybe. There are definitely options that do not have a prepayment penalty. In fact, some states prohibit prepayment penalties. The lenders do give you options for the prepayment penalty, anywhere from 1 to 5 years, and they can be declining, meaning as each year progresses, the penalty gets smaller and smaller. Now, the reason why you would get a prepayment penalty, and again, it could be optional, is you may get lower rates, better terms on the mortgage, so you'll have a lower payment, better cash flow for an investment property. Thanks for watching. Please drop any questions in the comments. You can schedule time with me in my calendar, the link below in the description. And again, please like, share, comment, subscribe, turn on the notifications for future videos, and please let me know if you found value in this content. Thank you so much.